Welcome to this Tuesday edition of Inside India. I'm Sri Jegarajah. Let's take you across today's headlines. Some trade relief in the markets as President Trump agrees to extend the US trade truce with China by 90 days. India is hoping to continue with the US trade talks despite its higher tariff recently imposed by President Trump. And President Trump clarifies there will be no tariffs on gold bar imports, easing some nerves in the market. Gold prices, though, are climbing again. Right, so relief rallies going on in some parts of the market, but not all of them. As we said in the headlines, there's some relief because the US-China trade truce has been extended by 90 days, and that perhaps is enough time for an agreement of some substance to be reached by the both sides, culminating in a summit perhaps later on this year in which Trump and Xi will announce a more meaningful and durable, let's hope, trade deal, which will be a permutation, one would expect, on phase one. So a lot of moving parts there. Nikkei, remember Japanese equities were closed yesterday, but the markets today liking the news on the trade truce being extended, making the Nikkei the market leader, up by 2.5%. Also saw record highs for that particular index, although we are seeing some weakness and some softness. Nothing really pronounced, though. Nothing really horror show at this stage, anyway. In New Zealand, Hang Seng, Straits Times and the SET. Right, now then, moving on. In a last-minute move, President Donald Trump has agreed, one of our headlines, to extend the US-China trade truce by 90 days, avoiding a potential escalation just as the deadline loomed. Elaine Yu brings us the latest. This is good news, Elaine, and buys negotiators some time.
That's right. And now the triple-digit tariffs are held off for now, avoiding an all-out trade war that could have wiped out bilateral trade between the world's two economic superpowers. And China has moved in parallel. It suspended adding 16 U.S. entities to its export control list for 90 days and terminated export controls on 12 others. So exporters now seeking to export dual-use items to these entities can apply to the China Commerce Ministry for review and licenses. And Beijing also paused plans to add 17 U.S. firms to its unreliable entity list. And in this seemingly ever-expanding list of things up for negotiation, there's a wild card, with Trump suggesting or publicly urging China to quadruple U.S. soybean purchases. And it's not clear if that's a demand or on Trump's wish list. But the biggest headline is, of course, the revenue cut deals for NVIDIA's and AMD's China sales, and Trump hinting that he might allow a similar arrangement with a scaled-down Blackwell chip. But Beijing is not making this easy. After Beijing summoned NVIDIA and asked it to prove that its H20 chips don't have security vulnerabilities, now state-affiliated media has amplified those concerns on the H20 over its safety, performance, and environmental credentials. And this could be posturing, right? Like each side trying to maximize their leverage as they go on with these talks. But it also reflects China's dual strategy of securing these chips in the short term while accelerating its tech self-sufficiency. But some have warned that it might not serve the U.S.'s interest to tie these short-term trade concessions with a longer-term AI and critical tech strategy. Back to you, Sri.
Elaine, great coverage. Thank you very much indeed for that. And in the meantime, US President Trump meets with Russian President Vladimir Putin this Friday in Alaska. President Trump now saying he will push to get back some territory for Ukraine in those talks.
There'll be some land swapping going on. I know that through Russia and through conversations with everybody. To the good, for the good of Ukraine. Good stuff, not bad stuff. Also, some bad stuff for both. So there's good and there's bad.
Ahead of that summit, Indian Prime Minister Narendra Modi spoke with Ukraine's President Vladimir Zelensky, reiterating India's call for an early and peaceful resolution to the conflict. Remember, Washington has hit India with 50% tariffs over its purchases of Russian oil, accusing New Delhi of funding the war. Despite tariff threats, US-India trade talks appear to be on track. Two Indian lawmakers, citing a parliamentary panel briefing, say there's no change to the sixth round of negotiations. The US delegation is expected to be in India on August the 25th. India's finance ministry estimates about half of exports to America will face the new tariffs. Quick check on the pre-open Indian markets. Join us in about 45 minutes' time. Let's give you nifty futures, gift nifty futures, and see what they're implying. 24,622 roughly is where we're expected to kick off. So if that does materialise, we're looking at just some very modest upside, considering where we left off yesterday on Monday at 24,585. Let's give you the exchange rate while we're at it, 87,675. So we're seeing some stabilisation in the cross. Tesla, meanwhile, has opened the doors to its second showroom in India. The EV maker launched in New Delhi weeks after its debut in the country with a flagship store in Mumbai. Tesla is selling its new Model Y in India with a starting price of around $70,000. But US tariff threats on India are fueling calls to boycott American multinationals, a headwind that could challenge Tesla in an already crowded EV market. Let's talk new age tech in India. The India Internet and e-commerce ETF INQQ is down about 3% so far this year. It covers India's booming internet scene, everything from e-commerce to food delivery and quick commerce. Many of these companies are still burning cash, remember, to grab market share. INQQ is quite a bit behind its bigger cousin, EMQQ, which is up around 18% so far this year. EMQQ's portfolio is about 40% weighted to China, 20% to India, giving it a broader emerging markets mix. Let's talk about this, and I'm delighted to say Kevin Carter joins us now, founder and CIO at EMQQ. He's also the founder of the India Internet ETF, INQQ. Kevin, welcome to the program, and great to have you on. First of all, FIIs, foreign institutional investors, they don't like, judging by the flows picture, the sudden deterioration in US-India relations that we've been talking about. 50% tariffs is now hanging like the proverbial Damoclean sword over the Indian markets and the macro. How does this change the narrative for people like yourself and global allocators?
Well, I don't think it changes it very much, for myself, and I think long-term investors, which is what I think investors should be, especially when looking at India. Obviously, the last several months with the tariff situation has been very volatile. We've seen flip-flops almost every day. Even the Intel CEO, went from being vilified to a hero in the last 24 hours. So I'm not so concerned about the short-term situation. I am confident that the U.S. and India will reach some sort of an accord here in the near term, but we'll just have to wait and see. In terms of foreign flows, the reality is that global investors are horribly underweight their exposure to India. And so I think that while there may be some negative movements in those flows, in recent times, I think that the long-term picture for India remains very good. I think it's better than most global investors think, and I think that foreign FII will go up, in the intermediate to long term, but by a lot.
Fantastic. Thanks for that, Kevin. And let's talk about your wheelhouse, specifically at a sector level. Are there, from a valuation point of view, are there air pockets emerging in India's listed internet and e-commerce space?
Well, the reality is that the PEs for India's equity markets are high. They were high in the fall. They had a correction, as you know, but they're back to, for the broad indexes being in the low 20s. But for the Indian internet sector, it's so early. And right now, frankly, I don't think investors should be focused so much on earnings as there are so many greenfield opportunities, white space opportunities. But the PEG ratio, the PE, which is high, divided by the growth rate, which is just as high, I think is justified. The PEG ratio is just a little bit over 1 for the INQQ index, the Indian New Age tech sector. So on a PE to growth basis, the Indian New Age tech sector is even cheaper than the broad index. And the other reality is that of the 26 companies we own, there's only 3 that are not profitable. So the Indian internet sector is not like the U.S. internet sector circa 1999.
Quick commerce, your view there, Kevin. It's such a big driver at the moment, but is it looking like a fad? Is it looking like an overly crowded trade right now? And how would you address these questions, very legitimate questions, as to whether it can sustain earnings growth in the longer term?
Well, frankly, I think quick commerce in India might be one of the greatest stories on the planet right now in terms of commercial competition and just consumption. I don't think it's a fad at all. I think that anytime you have something disruptive like this, you're going to have naysayers and people that think this is a fad or it'll go away or why would you need something in 10 minutes. But the reality is it's proving itself. The estimates from Morgan Stanley for the whole sector went up 50% 2 months ago. And we saw what Eternal reported. So I think this is very, very early in quick commerce. Obviously, there's going to be, some that will win, some that will lose, some that will win more than others. But right now, Blinkit especially looks quite compelling. And let me just also, when Amazon didn't make any money for 20 years. So, having a business where you have this greenfields opportunity and not focus, obviously you want to be and need to be profitable to build value long term. But in the near term, there's so much opportunity to go out and capture. I think that people are focusing on the wrong metric in terms of those companies.
So much opportunity, Kevin, granted, but competition and competitive pressures as well, which begs the question, can Eternal, through Blinkit and Zomato, see off this growing competitive threat from Big Basket, from Flipkart, from Swiggy and Amazon?
Well, only time will tell, but, they have basically half the market. Zepto and Instamart, not pretty far behind. Obviously, there's going to be a lot of different versions of quick commerce in India. You'll see niche versions of quick commerce, I think, as well. But I'm not concerned. Eternal looks to me to be in a great position. And again, the one thing that I emphasize with investors in the United States and in Europe and wherever else I speak with investors is that this is a long-term story. And to really make money as an investor, you want to benefit from the miracle of compounding, which means you want a long period of growth. And the higher the rate of growth, the better. And in almost every vertical in India, the growth can be 200%, 300%, 400%. And it will still be early. And quick commerce certainly represents that as much as any sector in India that I can think of.
Kevin, and for the record, Eternal and Swiggy are both top holdings in the INQQ ETF, if I'm not mistaken. Kevin, how concerned are you, though, about capital intensity rates and the cash burn that is necessary to keep up with the sheer pace of consumer demand in India that is associated with quick commerce?
Well, there's always challenges to scaling, and we've seen, companies pull back on some of their offerings, Zepto, for example. But I'm not concerned. This is a massive market. The India retail market is the most fragmented in the world. The 13 million Kirana stores, which are an important part of India's fabric. But the reality is that this is a better mousetrap, and I think that consumers are voting with their thumbs on their smartphone.
That's something of ethical price to pay, though, isn't there, for quick commerce and the toll that it takes on delivery drivers and fulfillment staff who are really working flat out to meet these orders on everything from salt to iPhones. Is there a backlash coming against these names of the type that Amazon has had to deal with in terms of workers' conditions, rights and pay? And is that perhaps a medium to longer term factor that you have to account for and could possibly be an overhang on the stock from a regulatory standpoint?
Well, there's no doubt that that's true. I mean, look, we've seen this story play out across the world in the last 10, 15, 20 years, whether it was Uber disrupting the taxi industry or in China, the quick commerce pressure of the drivers to make that fast delivery. So there's no doubt this is going to be something that's talked about and a risk, but I think a risk that's overcomable. And we've already seen the trade groups, for the Kirana stores, focus in on the quick commerce. But I think they'll overcome all of those kinds of obstacles. I mean, the markets climb a wall of worry, and I'm sure that'll be the case with quick commerce. But I think this is going to be a massive sector in India, in 10, 20 years from now.
Kevin, there's perception issues as well, though, right? And do you feel that some of these names are perhaps sacrificing health, hygiene and safety standards in an environment where just days ago, the Bureau of Indian Standards raided 22 warehouses of Amazon, Flipkart, Meesho, Big Basket, Myntra, and now those names are facing lawsuits for allegedly selling unsafe and non-certified products on their platforms? That's clearly going to have an impact amongst the consumer. How do you price that in?
Well, again, the world's a risky place, and this is something we've seen time and time again in the last 20 years. I mean, again, you're talking about an incredibly disruptive sector. You're talking about changes in business models and employment models, and there's unquestionably going to be challenges and issues and safety issues for drivers and so forth. But I still believe, just as we've seen play out both here in the United States and in China, that these models and this model in particular will overcome this and become a very meaningful part of retail consumption in India, as it already is becoming very quickly, no pun intended.
None taken. Kevin, so what do you think is the next step in the medium to longer term? Because the way this story is playing out in Southeast Asia, where e-commerce is very well defined, is in financial services. That seems to be the next logical step for e-commerce, the big e-commerce players. Do you see that happening in India?
Well, I think it's certainly a possibility. I mean, one of the things you saw as the internet spread across the world in Latin America with Mercado Libre and Southeast Asia, as you referenced, is because a lot of people in the developing world have never had a relationship with a bank account or a credit card. And so they had no form of digital payment. A lot of these e-commerce companies, the early ones, basically became the payments platforms. India's different in some ways because of the stack. I mean, the value of the India stack, I think, it's hard to overstate this. The India stack is a secret weapon that India has. As you know, the UPI payments being processed every month are now more than Visa's payments are being processed globally. So India is in a unique position. I don't think that the financial services opportunity for the e-commerce companies will be as big in India as it has been in, say, Brazil with Mercado Libre. But I think that's good for India. As you know, there's a lot of publicly traded already fintech companies that really are already doing a lot of the things that Mercado Libre might do in Brazil, for example.
Yeah, great parallel with Brazil, Kevin, and India and the entire BRICS narrative and that story. Can I just circle back to domestic investors in India and perceptions there, because they do seem to be less unsettled by the prospect of 50% tariffs. But what they are concerned about is what they see as a disappointing quarterly earnings season, especially amongst the IT services and severe layoffs at names like TCS. What do you make of earnings season, and what is that telling you about allocation?
Well, I mean, let me first applaud India for its, hundreds or a couple 100 million people coming online to invest in the first place. And while we've had, negative elements like the options trading, you've also got 100 million plus people investing systematically every month, which is exactly what every investor should be doing. And so that's a positive side, the domestic inflows. In terms of the quarterly earnings, look, the one sector in India that, as you mentioned, the IT outsourcing businesses, they have a ton of exposure to the United States and non-Indian revenue, basically. And while they seem like they would be ripe for disruption because of AI, I'm not sure that's the case. If you look at what Infosys is reporting in terms of the AI work that they're taking on for the companies they support, I think it remains unclear whether AI is a risk to India's IT, traditional tech sector, or if it's an opportunity. But in terms of this quarter for the entire India market or for that sector, I have no idea. I certainly think that you'll continue to see significant growth in the new age tech companies.
We need to work out AI and that transition. It's that much is clear. Kevin, great talking to you, sir. Thank you very much indeed for your insights and your analysis. Kevin Carter there from EMQQ. Now, Air India will suspend direct flights between New Delhi and Washington starting in September. That's due to aircraft shortages and Pakistan's continued airspace ban on Indian carriers. The airline is retrofitting 26 Boeing 787-8 planes to improve customer experience, which will limit fleet ability through the year 2026. The Pakistan airspace closure following heightened tensions after the Delhi Kashmir attack in April is costing Air India an estimated $600 million annually. We'll be back in 2 minutes with more. Welcome back. Some top stories we're keeping tabs on. Dozens of opposition leaders, including Congress's Rahul Gandhi, were briefly detained during a protest against India's election commission. They accused the panel of electoral fraud and demanded a clean voting list. Ruling BJP and the election commission both denied the allegations, calling them attempts to undermine democracy. South Korean President Lee Jae-myung hosted Vietnamese leader To Lam. The two discussed business ties amid a challenging trade environment, both countries agreeing to expand trade to $150 billion by 2030. Philippine President Ferdinand Marcos Jr. defending his comments where he said there's no way that he could stay out of a possible conflict between China and Taiwan if one erupts. Marcos now saying China, quote, misinterpreted what he meant. And protests erupting across Washington, D.C. on Monday after President Trump announced he would federalize the city's police department. NBC's Molly Hunter has the full story.
You remember I said, I offered 10,000 once. Remember
President Trump declaring a public safety emergency in the nation's capital. Today announcing he's sending National Guard troops to the streets of Washington, D.C., claiming crime is out of control.
This is Liberation Day in D.C., and we're going to take our capital back.
He also federalized the Metropolitan Police Department temporarily after a former DOJ employee was attacked, according to a police report. The president said he would notify Congress about the decision, but gave no specifics for how long he would overtake the police department, though he would need joint approval from Congress if it lasts more than 30 days.
When you walk down the street, you're going to see police or you're going to see FBI agents.
But statistics from the Metro Police Department and the Justice Department contradict the president. An MPD report shows violent crime is down 26% from last year. Homicides are down 12%. Critics point out that the president didn't immediately call in the National Guard when rioters attacked the Capitol on January 6, 2021.
Who city?
Our city. Outside the White House, D.C. residents made their disapproval known loud and clear. The mayor firing back.
This action today is unsettling and unprecedented. I can't say that given some of the rhetoric of the past, that we're totally surprised.
As the president seeks to fight crime in Washington, the White House is also preparing for his meeting with Russian President Vladimir Putin Friday, standing firm that Ukraine and Russia may need to swap territory to come to a peace agreement.
Russia's occupied a big portion of Ukraine. They've occupied some very prime territory. We're going to try and get some of that territory back for Ukraine.
Though Ukrainian President Zelensky insists he will not cede his country's land.
President Trump says President Zelensky was not a part of the planning for this meeting. And today, the German chancellor invited world leaders, including President Trump, to a virtual meeting before Friday's summit to discuss the peace negotiations and pressing Russia to end the war. Monica Alba, NBC News, Washington.
Coming up on the programme, retail investors are piling into India's equity mutual funds, hitting a fresh record high last month. We'll discuss what's driving this surge after this short break. Welcome back. Let's take a look at the price of gold and where it's trading here in Asia. $3,351 an ounce, roughly, is where we are standing. Overnight prices were down after President Trump clarified the tariff stance on gold. Trump posted on his social media that gold bars will not be tariffed, but gave no other details. This comes after reports that commonly traded gold bullion bars might face country-specific tariffs. Investors now await US inflation data later tonight for more direction. And of course, we're counting down to the market open in India. This is how we are shaping up. Nifty futures suggesting 24,629.50 at the open. That would represent some very modest upside for the benchmark, considering where we left off yesterday. 24,585. Dollar rupee exchange rate sitting at 87,685 and relatively stable. In the IPO space, JSW Cement's IPO fully subscribed on its third day of bidding. The $413 million offer was overall subscribed around 8 times. The cement maker, which is part of the JSW Group, is targeting a $2.3 billion valuation, and stock will debut on the markets on Thursday. And fund flows into India's equity mutual funds hit a record high in July, surging 81% month-on-month to nearly $5 billion. This as local investors bought on market dips amid US-India trade tensions and weak earnings. Systematic investment plans, or SIPs, also saw record contributions with over 91 million accounts now active. Despite foreign investors pulling out $2 billion last month, domestic inflows helped limit losses. Gold and silver ETFs also attracted notable investments last month. Let's get more on the outlook for the Indian markets and the macro. Pratik Gupta joins me now, the CEO and co-head at Kotak Institutional Equities. Pratik, welcome to the program. So as we noted there, domestic investors, they seem to be less unsettled than their peers in the FIIs. They less unsettled by the prospect of 50% trade tariffs on India. But what they are concerned about is the disappointing earnings parade. What were your takeaways, and how then should we allocate accordingly?
Hi, good morning. Yes, this is data for the month of July, so it's somewhat backward looking, but nonetheless, it is a fact that domestic investors have been pouring money into Indian equities. July was another record month. We saw something like 430 billion rupees worth of inflows into equity funds. And I would say there are two main reasons. Firstly, unlike global investors, domestic investors don't have that many options. The retail investor base is either not sophisticated enough, or they do not have the avenues or the ability to invest globally. So therefore, by default, they end up investing in India itself. And within India, the alternative to equities is your fixed income products. And over there, the post-tax return has been running around 4 to 5%, depending on your income tax bracket. And usually that's not good enough to beat the real rate of inflation, which is out there. So which is why we've seen over the last couple of years, since the tax change was brought about, that equity inflows from the local investors have been very strong. So that's reason number one. The second reason is there is genuinely some optimism that the concerns about the Trump tariffs and even the earnings is somewhat overdone.
Yes.
The expectation is that you could probably see Trump revising the tariffs perhaps once the Russia-US talks happen.
Exactly.
So the extra 5% which has been imposed on India might go away. So that's the other reason. And second is on the earnings. And there's an expectation that in the second half of this financial year, you could see earnings pick up after a monsoon, which has been quite good. And the usual second half recovery, the festive season is coming up. You have Deepavali and Christmas and so on. So that's really the expectation.
Great points, Pratik. And let's just unpack some of them. And August the 27th is when this 3-week window for negotiations on the additional 25% tariffs expires. Optimists, as you noted, they are hoping for an extension or a lifting, and no doubt a lot hinges on the outcome of those talks between President Trump and President Putin this Friday. So on balance, are any pullbacks in the Indian benchmarks opportunities, or would you be inclined to stay on the sidelines until all this noise settles?
We are actually at Kotak recommending investors stay on the sidelines because of one is the event risk. There is a chance that things don't get settled. The talks with Russia have been going on for a long time. Trump had promised that within, I think, 90 days, he'll end the war. That's not happened, and Ukraine is digging its heels into a very tough negotiating stance. So we don't know whether this peace talks will yield any results, although the hopes are running high. And if they don't, then India may continue to remain impacted by the higher tariff of 25% over and above the baseline tariff of 25%, so totaling 50%, which is a pretty serious blow for Indian exports. We think that will impact Indian GDP by about 60 to 80 bips on an annualized basis, bringing the overall real GDP growth rate down to below 6% for India. So that would be quite negative. And the second reason is valuations. It's not that India is a cheap market. Even now, it's trading at about 21 times one-year forward earnings for earnings growth, which for this year will likely be just about 10% and next year about 17%. So it is an expensive market. We're not cheap. And then you have the event risk coming up, and talks can go either way.
Absolutely, absolutely. And let's just continue to unpack that event risk, if we may, Pratik. The sixth round of US-India negotiations happens on August the 25th. That time frame is still on schedule, despite all the animus between US and India. Is there going to be an element of buy the rumour, sell the fact type of trading and volatility going on in the Indian markets?
Quite likely. I should also clarify that India and the US over the last 25 years have come, there's a much deeper relationship from a strategic perspective. India is a member of the Quad. The IT services industry is a big provider of services to a lot of US corporates. So there's a strong support for Indian businesses from the American companies. So there is a lot of strong relationship. There is a chance that things could work out, but that is already being priced in. So as you said, buy the rumor, sell the fact. The valuations are not suggesting that there is any kind of the risk. The negative outcome is not priced in at 21 times 1 year forward with a very weak near-term earnings outlook. That is not priced in. So therefore, we don't see that much of an upside from the current levels, but we do see significant downside should the tariffs continue to stay the way they are.
Pratik, what did you gather from earnings season in a market where overvaluation, and you touched on this earlier, remains the perennial concern, especially amongst global allocators, and where then are multiples and the discount perhaps most compelling?
So just to give you some perspective, we at Kotak covered 300 companies, and out of the 300 companies, I would say the vast majority have disappointed, either in terms of their June quarter earnings or more importantly on the outlook for the rest of the financial year ending March. And as a result, at Kotak, before the earnings season, we were projecting earnings growth of roughly about 12% for financial year ending March 26. And that has already come down to 10%. And there are still a couple of companies yet to report. So that's as far as the earnings outlook is concerned. And it's pretty widespread. It's not concentrated across one or two sectors. It's across the consumer sector, the IT services sector, the banks and the shadow banks. So across the board, the earnings outlook has been quite disappointing. And we have seen fairly sharp corrections in some of these sectors. Now, as far as the where we see value being relatively better, it really comes down more to what's being priced in. And here we would say the banks, despite the weaker outlook, we have seen banks actually coming off, and therefore we still like the private banks in particular, where asset quality is strong and where the liability franchise is still very strong. The second sector I would argue is the life insurance sector. Again, this is a sector which has not run up too much, so that's doing quite well. And then third, I would say stay away from the export plays, look at more the domestic plays, like hospitals, or domestic pharmaceuticals, the hotel industry, the telecom industry. These are sort of sectors which would be less impacted by any negative surprises on the tariff front.
Yes. Pratik, would you extend that line of thinking to new age, new economy companies, the e-commerce companies like Eternal and Swiggy? We were speaking to Kevin Carter earlier. They are the top holdings in the INQQ ETF. Do you like the narrative there, and are they names and sectors that you want to own?
Yes, absolutely. These are the new age companies like the ones you mentioned. They do hold a significant amount of potential in the long term. Short term, obviously, they're also getting impacted by the ongoing consumer slowdown in India. But fundamentally, this is a very nice industry structure, largely a duopoly or at best three main competitors. And the market is still in the very early stages of its, considering the long-term growth potential over the next 10, 20 years. And these guys are also finding new business avenues. Like a couple of years back, Swiggy and Eternal were largely just food delivery companies. Now they've become quick commerce companies and wildly successful at that, wherein you have deliveries taking place within 10 to 15 minutes. So we see a lot of potential over here. Short term, yes, there are some concerns, but from a fundamental longer term perspective, we like both these stocks.
And short term, there are concerns with IT services, but longer term, Pratik, does the story add up? And again, Kevin made a great point on whether these IT services names have really figured out the long term, how to approach and how to integrate AI with all the displacement risks that it brings with it in the longer term, as though it's a risk, a challenge and an opportunity. How are you approaching the IT services end of the market?
So we have been cautious on IT services in India for exactly those same reasons. One was the AI threat, which is likely to be negative in the short term before it becomes positive as you start requiring the Indian IT companies to implement a lot of the AI tools and enablers. But in the short term, we do expect weakness. Second, there has been continuing weakness in discretionary IT spending from the US companies in particular. And June quarter, once again, we saw company after company telling us that discretionary IT services demand globally remains weak. And that is why we've seen downgrades to earnings estimates for the Indian IT companies. And also the starting point, at the start of the quarter, the Indian IT companies were trading at fairly expensive valuations. Most stocks were anywhere between 25 times to 40, 45, 50 times 1 year forward earnings for largely, around 8 to 12% earnings growth. You had some mid caps which are growing a bit faster, but generally quite expensive. What we've seen is since then, valuations have come off and some of the AI risks are getting priced in and the sentiment has become somewhat more neutral rather than overly bullish. So which is why now we're taking a slightly more neutralish stance on the Indian IT companies, where we think a lot of the AI stuff is probably, there's a lot of hype built in over there, so there'll be some disappointment. But from a longer term perspective, even if as you transition away from the AI risks, we think these companies will still do well.
Pratik, how are you approaching Pharma? And would it be prudent to shift to a neutral, even an underweight allocation on that part of the market, given the uncertainty, continued uncertainty associated with whether it's at the sharp end of 200% tariffs or not?
Absolutely, which is why within pharma, generally we would stay away from the export-oriented generic pharma companies. They are the ones who will be at risk to any tariffs imposed by the Trump administration. And we prefer the domestic pharma companies which are catering only to the domestic markets. So that's point one. The other way to play the pharmaceutical space or the general healthcare space is what we've been recommending is to look at the hospitals in India. A lot of private hospitals are expanding in a big way. India is still a market which has a very low penetration rate as far as hospitals are concerned. So there's plenty of growth opportunity over the next 10, 20 years. And which is why we've been recommending consider the hospital space instead if you want to play the overall healthcare space. But otherwise, if you want pharma, then stick to the domestic pharma companies rather than the export-oriented pharma companies.
Pratik, just to round off on the RBI, because benchmark equities markets, they seem to be a little bit disappointed that they didn't hear more of a dovish tilt from the Sanjay Malhotra and his team. Were they right to keep their powder dry, given the balance of unfolding risks domestically and externally?
We think so. I think what RBI has been doing is they have to keep an eye on the currency as well. And if you notice, the Indian rupee has depreciated by roughly 1.5%, 2% in the last 1 month. So they can't just look only at inflation. Inflation is low, and yes, growth is low, and which is why there were expectations that the RBI will take a more aggressive stance in terms of rate cuts. But I think they've made the right decision. You have to look at everything, and keeping the currency in mind, they've held back. And we think there'll be opportunities later this year if once you have clarity on the tariff situation and the export situation, and therefore on the growth outlook and inflation outlook, I think they can take another stab at it later this year. By the way, just to clarify, we are expecting another 25 to 50 bips of rate cuts later this year.
Thank you for that clarification, Pratik. Good to know. Thank you very much indeed, sir, for joining me and for your analysis and insights on the market. Pratik Gupta there from Kotak Institutional Equities. Right, now I want to bring you up to speed with some interesting developments, but hardly unsurprising developments on the BRICS front. We are hearing that President Xi, China's President Xi, of course, tells Lula that Chinese-Brazilian ties are at their best in history, and that the BRICS mechanism is a key platform for building consensus in the global south. So continued realignment and the BRICS quite clearly closing ranks given the balance of risks in the international trade arena, ostensibly coming from the United States. Right, Indian markets are online, and let's give you a glimpse of the price action on the benchmark, the Nifty 50. Let's call it treading water at around 24,550. Dollar-rupee exchange rate is stable at 87.6525. We're back in 2 minutes. Welcome back. Let's give you the gold price once again, and the precious metal is trading like this. We're going to bring up the board momentarily. In the meantime, investors are breathing a sigh of relief after US President Trump clarified that there will be no tariffs imposed on imports of the yellow metal. Barrick Mining CEO and President Mark Bristow spoke to our US colleagues overnight. He believes there's still more upside risk on gold prices, which is trading right now at $3,350 and some change. Let's take a look at the Asian markets, and the Nikkei is currently leading at the moment, up by almost 3% actually, extending the gains, 42,954. Looks like it could make a run and test 43,000. We're probing new record highs here actually for the Nikkei, and broadly sentiment is looking that much more better given the prospects for a US-China trade deal, perhaps not immediately, but further down the line that could culminate in a summit later on this year between Xi and Trump. Let's take a look at the Sri Lankan rupee at this point in time. This is where we are standing. Those are the Asian markets. But Sri Lanka obviously is dealing with the legacy of an economic crisis and financial market turmoil, economic turmoil, sky-high inflation. But over the past several years, Sri Lanka has been on a recovery path. And I also wanted just to bring it back to the Asian markets very quickly, and let's give you the Indian market, since we're talking about Sri Lanka and the proximity to its neighbour. And the benchmark Nifty momentarily is trading like this, about 5 minutes into trade, and we will show you that momentarily. That's what the Nifty is doing right now, stable at 24,586. Returning to Sri Lanka, I'm delighted to say that Nandalal Veerasinghe is with us now, the Governor of the Central Bank of Sri Lanka. Governor, welcome to the programme. It's a pleasure to see you. And I recall I saw you last several years ago in 2022 during the height of the economic crisis. You held steady at 7.75% last month. The next MPB meeting is the 23rd of September. Is there room for further easing, or are current settings appropriate?
Now, based on the information we have now on the forward-looking basis, current policy setting is appropriate, because we had the concern earlier because of the uncertainty on the US tariff.
That's right.
And now we have access to a global market and impact on the external sector. If there's going to be any impact, or if you're going to see any impact on the growth and inflation, then obviously we have a good space in the monetary policy. For example, our target is 5% the inflation. 7.75 the policy rate. There's a good positive 2.75 real interest rates buffer is there. So we have a good healthy buffer. If we are to use that, right now we think it's right balance, because uncertainty is now less with the 20% tariff imposed on us compared to our competitors. I think I don't see a risk of slowing down the economy as a result of this. I don't see a risk of inflation going well beyond the 5% in the next 12 to 18 months. So I think right balance right now. But if we are to see a change in that situation, we have a good buffer for us to use to support the economy in terms of monetary policy.
Do you feel that Sri Lanka and the economy can absorb and can manage 30% headline tariffs, which is less than what the Trump administration initially opposed at 44%?
No, initially 44%, later it was reduced to 30%, now actually 20%. Last couple of weeks, 20%, which is compatible and comparable with our competitors, those who are having equal access to the US market. So 20% is same like what we had earlier, same level of comparison and competition. So that's why we think we can manage. That's not an issue right now at the current rates, but this is a very dynamic situation. We have to wait and see what future holds in terms of discussion with China, India for the progress, that we have to monitor that.
Inflation has gone on a wild ride in Sri Lanka. During the crisis years, you and I, we were talking about this, it was sky high, double digits. Yes. Now, Sri Lanka is in a deflationary environment. How confident are you, Governor, that you can get to 5% target?
I think in our projections, as you already published, we hope we get close to the target level towards the first half of 2026. Within next 9 months, we think we will go back to our target level of close to 5%. Because this deflation is a temporary situation as far as I can see. It's coming down from, as you said, 70% inflation, brought down to 0 within 12 months. Since then, it has been pretty stable level of prices, deflation or 0 inflation. Now going back to 5%, it'll take another 7 to 8 months, so we will back to our normal target range.
Do the hardest reforms now lie ahead, and what needs to be done to make Sri Lanka's economy resilient in the longer term?
We have achieved the stability through short-term important reforms, fiscal, monetary, external. We've already done. Banking sector was completed. Next phase of reforms is to support the enhancing growth. From the stability, growth is an important one. We need to maintain at least 4 to 5% medium long-term growth compared to minimum required under IMF baseline scenario outlook is 3%. That is needed to restore the sustainability by 2032 within targets. But we would like to reach that target much earlier by overperforming in all the indicators, fiscal, monetary, and growth. That's why we see last 2 years we have been able to perform better than the baseline requirement of the debt sustainability. We hope that we can continue to overperform that so that we can bring back the debt targets to a much comfortable, sustainable levels much earlier than what was expected.
When you talk to Sri Lankans, Governor, as I'm sure you do, how are they characterising the recovery from 2022 to where they stand now? How have their lives improved in terms of cost of living and in terms of employability and job creation?
In fact, this when you got hit by that kind of crisis, recovery to same level take several years. It's usual situation. But in our case, what I see so far is not exactly the same before the crisis. Still, we have some way to go. In my expectation, within next couple of years, we will be overperforming and we will be back to the levels that we had before the crisis. That we can see quite easily. Yes. But still, in terms of poverty, in terms of unemployment is quite stable. There's yes. no issue. Yes. Poverty is still higher than what we had before the crisis. It will take some time to spill over this impact of the economic growth indeed. Into lower levels.
Governor, thank you very much indeed for your time today. I appreciate it. Governor Nandalal Veerasinghe there, Governor of the Central Bank of Sri Lanka. We'll see you tomorrow.